Okay, great stuff then, guys. So, just conscious of the time, so I think it's probably best that we begin. But welcome to our latest Pika meeting. Thank you very much for joining us this evening and not going down the pub with your friends. We've got some great content tonight that Peter's going to share with you. So really, hopefully you can find it of interest and value, and then you can, apply it pretty much the next day as well. Just so you know, Peter unfortunately injured himself the other day, so you might just have to bear with him just a little bit, just because it's just shook him up here a little bit. But it's great that he could still put in the effort and put the injury aside and join us again tonight and deliver some good content. So Pika, for those of you who don't know, Pika, the Property Investors Coaching Academy, we provide a range of webinars like this evening, training courses and personal mentoring programs as well. And it's really about helping you become successful in your property investment journey. And Peter is the MD of the company and I support Peter. And really kind of my role is marketing. So I help to put on these webinars, help to host them, and really trying to help communicate as much value as we can to you guys, really. So that's pretty much me in a nutshell. As I say, my background's marketing, and I support Peter with Pika.
Thanks, John. Thank you very much. And hello, everybody. Welcome. Great to be back on here doing these webinars. We love doing these webinars. We look forward to them so much. For those of you who don't know, my name is Peter Hogan. I'm a businessman, a property investor of 36 years experience, author of about half a dozen books with 2 more in the pipeline, a mentor and an educator, amongst many other things. And just lately, I've just taken up a new hobby of falling headfirst into a wall, not to be recommended. So I bashed my head in. So if you see any marks on my head, that's what it is. Now, if you've got any questions tonight, write them in the chat box. We'll get them at the end, the Q&A session at the end. There's a reason for that. It's so that we don't get diverted and get off topic as we're doing it, because we've only got a limited amount of time. So I get asked, what, invest in the commercial property market with the recession situation and Brexit? Really? Yeah, and why not? It's a perfect time. And I tell people, I say, but it's a great time. There's so many deals out there. And I get this, yeah, it's all right for you, but you know what you're doing. And I say, it's nonsense. That's nonsense. It's easy and anybody can do it. Anyone can do anything. If I can do it, you can do it. If he can do it, they can do it. Anybody can do it. You can learn anything. And not only that, but what you practice, you become good at. Remember that. So what you're going to learn this evening, you're going to learn about the problems with residential property, the benefits of commercial property, a real live example of a deal, and the one I'm guessing you all want to know about, the death of UK tax bills, for those of you who know how to do it. So let's get on with it. There's a massive commercial opportunity going right now, and you need to be involved. But when we start off, let's look at the comparisons between commercial and residential properties. And I've just put a little kind of chart together here, and we've got a residential list there and a commercial list there. I'm going to compare them. So let's look at the lease length, the length of lease. Now the average for a residential property is 6 to 12 months, and that's on an AST. For commercial, it's 8 years. Imagine that. You're not going to get any voids in 8 years, are you? Management fees. Well, in residential, and you need a manager. Let's face it, you need management. Anything to 18 to 15%. That's a big chunk out of your income. For commercial, it's 3.5%, but the tenant pays it. You don't pay anything. How good is that? Repairs and maintenance. Let me get that back. Repairs and maintenance. Well, obviously, with residential, you, the landlord, pays for all that. You know that. How many times you get called out to fix this and fix that? But with commercial, the tenant pays. The tenant signs a full FRI lease. That's full repair and insure. So it doesn't matter. Yeah, you know, we're not talking a key stuck in the lock or something. If the roof caves in, the tenant has to pay for it. And that's the beauty about commercial stuff. Isn't that great? So you got no repairs, you got no maintenance for the life of your contract. Tenants' rights, well, numerous and growing, aren't they? Everybody knows what the tenants' rights are, particularly the tenants, because they're smart enough these days to try and learn, so they can find ways of getting out of paying your rent. Basically, that's what they want to do. Commercial, there's hardly any rights for the tenant, and there's something that's called a commercial rent arrears recovery. So even if they don't pay the rent, you can go and claim the rent back. You try doing that with a residential tenant. Now, eviction. If you've ever had to evict a tenant, you know what it's like. It takes months, it costs a fortune, and all the rent they haven't been paying, you lose. It's terrible. It's a terrible thing. I'm going to tell you something else as well. If you've got residential property, you want to bear this in mind, and you might want to think about whether it's worth keeping or not. What's going to happen with this recession is that people are going to lose their jobs. When they lose their jobs, they've got to go and claim benefits, but they can't get benefits while they're paying the rent on the flat, while they're in the flat. So they need to be evicted because they can't leave the flat on their own, out of their own will. If they leave, they don't get benefits. They have to be evicted. So are you going to evict them? Nope. What's going to happen is that they're going to make themselves nasty tenants and withhold the rent. So you've got no option but to evict them. And that's what happens. Commercial, it's straightforward and easy. Let me tell you what happens with the commercial property. If they don't pay their rent on the 1st of the month, on the 2nd of the month, you can go around and change the locks. And if they still haven't paid their rent 14 days later, you can enter there, seize all their belongings and sell them. How about that? Now you see the difference. You see the difference here. Let's look at the competition for residential. Let's try and find residential properties that are suitable for, HMOs or whatever. There's a high competition. There's a lot of competition there. But in the commercial, it's very, very low. There's low competition. They're everywhere. I'm going to show you some tonight. I think it was the third house I looked at, or second maybe. And taxes, of course, for residential is expensive. It's getting worse. Look at all the article fees and license, bringing all these fees in. It's just getting worse and worse and worse. Whereas for commercial, there's very low tax, and you get tax breaks. It's from that point of view, looking at that chart straight away, you'll see that there's no contest really. No contest. Anyway, let's look at a residential property. Now we're thinking lower to medium end price range here, something maybe suitable for conversion to an HMO with a minimum 5 bedrooms. And we're looking maybe 350k to 400k. Now, I was looking around and this got my eye straight away on the first page I looked at. And this is in Coventry. And it's, I'll analyse this for you so you can see. It's a really nice house. It's a big house. It's actually 2 houses knocked into one. So for that price, 2 houses knocked into one, that's a darn good price, I'll tell you. And this is a view from the other way. So let's go back to that main page again. And if I enlarge that panel on the right where the information is, three interesting things here. First thing you'll see is that it's been reduced from the asking price of 425,000. So it's been reduced by £30,000. That's good from our point of view. It's actually an HMO. It's already an HMO, a 7-bedroom HMO, including, it says, 2 luxury ensuite rooms, and all the bedrooms are a great size as well as the communal areas being big enough for huge parties or something. And look, it was added on 13th of September 2021, so it's almost a year ago. Now, do you think they're in the mood for a deal? Do you think that's going to be a good deal? Yeah, of course it is. Let's look at some of the rooms inside. Now look at that, that's obviously a communal room. Just look at that, it's pretty smart, isn't it? Pretty neat. You don't have to do anything to this, so you can, so you move in, you do it. That's a bedroom. It's another bedroom. You can actually do a little bit more with kind of like rugs and pictures, that kind of thing, but there's not much you've got to do. I don't spend hardly any money on it. Look, it's very neat, and it's been looked after. You show this landlord with different colours of paint and blinds and that kind of stuff. You can see the landlord knows what he's doing. Incidentally, let me tell you, when I spoke to the agents, because I needed to know a lot of information, I wanted to know why the landlord is leaving. Guess why? He's going into commercial property. How about that? There's another bedroom, look, and another one. And just to remind you, that's how big it is. It's 2 houses knocked into one. And here is the the map of where it is. Now, that round Ring Road, that's the centre of Coventry there, the Ring Road round it. And just here at 2 o'clock, an inch out from 2 o'clock there, that is the property. So it's very, very close to town centre, which is good. And not only that, but it's perfect for students because all the colleges and universities are around this area there. So it's great for students because you know what students are like. They don't want to travel very far. So if we put down on the bottom of the page, on the first page, you'll get a mortgage repayment calculator. So if we look on that, we'll see that the monthly repayments, the mortgage repayments on this, over 2.8 annual interest over 25 years, are 1,650, which isn't too bad. So that's all right. Now, also on Rightmove Commercial, this is on Rightmove Commercial, by the way, you get a lot more information than you do on residential Rightmove. And we also get this as well. Now, interestingly, it's got there the average download speed of broadband, which is 1130 megabytes, and that's pretty good. And you need that if you're going to get students, because obviously they want to, they want to sit waiting for the laptop to load, are they? So that's good. And then further down, they've got the property sale history. Now, this is interesting because you'll see that it's sold twice since 1997 over the last 25 years. 26 years, it's sold twice. It was originally valued at £50,000, and then over the next 6 years, it went up to £120,000. It increased by 140%. But bear in mind, 2001 to 2002, 2003, that was a time when the property was going silly. The property market was going silly. I'll tell you straight, in those days, if you saw a property on the morning, on Rightmove in the morning, at asking price, and you called at lunchtime for a viewing, it had gone for £30,000 more than the asking price in the morning. That's how it was in those days. It was absolutely crazy. So that's a little bit exaggerated because of that, but it went up. But there you see that from 2003 to 2008, which is 5 years, it's gone up by 50%, and that's in line with our general thoughts that residential property will double in value every 10 years, and that has in fact doubled. It's gone up in value by 50% in 5 years. That's effective doubling in price over a 10-year period. So that's brilliant, and that's what we want to know. That shows that it's good. Now, further down here as well, at the bottom of the page, you'll see it says here on the bottom right, see similar nearby properties, which is good because we want to see what the competition is. So when we click on that, we get a page like this. Now we've got there one, offers in excess of 300,000, 900,000, 420,000, 3 million. So I looked at that one and that doesn't suit, it's too far out. But I looked at this one here, this top one, 300,000. When you click on it, that's what it is. Now, it doesn't look much, does it? Remember, this is offers in excess of 300,000. Compare it to that, which is two houses not together, and that. It's not much of a deal, is it? You want to look inside this? Let me show you. Look at that room. Just look at that room. Look at the state of the ceiling, the papers hanging on the walls. Look at the dirty state of it. That is disgusting. Now compare that with the rooms you saw in the first property, and which are you looking at? There's not a huge amount of money between the two, but this is what you mean about by checking out what you're doing. So look, let's look at the figures here. So the purchase price for this is £395,000, and let's work out the buying costs. Now the deposit is 10%, which is 39,500. Your stamp duty, SELT, is 21,600. Your fees are approximately 3,650, giving you a total of 64,750. Now before you say, "Fuck, I couldn't do that, I haven't got the money," and that's the end of it, don't stop right there. Because I'll tell you what, there is so much money around looking for people who know what they're doing, who want to give you their money. I can show you how you can get these people, how you can find these people. So don't think for 1 minute you can't do it because you don't have the money. You don't need the money. You can get partners to put up the money. As long as you have the knowledge, then you'll always find people with the money. I promise you. This is one of the basic things of property investment. Let's look at the outgoings on a per annum basis. Okay, the mortgage is 19,800 a year. Your management is £4,000 a year. Utilities, these are average figures as well, by the way. Utilities 6,000, extras 1,200, and voice 2,500. They're average, but they're pretty good average because I've been obviously in the business for a long time. So your total outgoings are annually 33,500. All right, but let's look at it, spread it for a bit, and let's look at it over a 5-year period. Let's see what happens over a 5-year period. So the 5-year figures are your income is 39,600 by 5 equals 198,000. How do I know what the rental income is, by the way? It's because I asked the agents. I said, I need to know what the rental income is. And they told me 39,600. So that's what they are. Now, actually, when I look at around there, so I've done my research, and I've looked at the average prices around there. It's ridiculous. That 39,600 means they're charging on average 700 quid a month a room, which is very, very low, especially for rooms of that quality. You could easily, if you had this property, you could very easily add another £100 on that. And if you had £100 per room per month to that, your income over the 5 years is £42,000, not to a sniff now. But anyway, your income would be at the moment on the price they're charging there. Your income is £198,000 over 5 years, and then you've got your outgoings. Of course, you've got your 33,500 by 5, which is 167,500. But then I've added 20% of the buying costs, 20% being 5 years of 25 years of your mortgage. So I've put down 20% of that, your buying costs, which is 12,950, which is 180,450. That's your costs, that's your outgoings, which gives you a gross gross cash profit of £17,550, which you may or may not think is any good. Entirely up to you. So over that 5 years, remember, you're not just making that 17,550, but your value is appreciating in equity. And that equity increase on the rate that's been shown already is going to be approximately 197,500. So in actual fact, your 5-year profit on that house, were you to sell it after 5 years, will be £215,000 and £50. So 215 grand, 5 years, not bad. Anybody happy with that? Anybody not happy with that? I think, 200 grand, let's face it, if you had 5 of those, something like that, you're on £1 million in 5 years, aren't you? Not bad, or 200 grand a year. That's not bad at all. Yeah, it's not bad money. You've got to look at it like that. Let's look at commercial property. So right now we're open-minded on price, but we're looking for an office block with potential. Now, we're not going to convert it to residential. This isn't commercial to residential, it's commercial. And we're going to keep it as offices, but we must have the availability to add value if we can to upgrade the offices. And I was looking around, and I just clicked on Nottingham, and straight away, about halfway down the page, this popped up and caught my eye straight away. And I thought, wow, look at that! That is some frontage to that property, isn't it? Let's have a bigger look at it. Look at that! I mean, the bay windows, that's a beautiful property. And I thought, and it looks even better when you look at the buildings surrounding it. I mean, they really show off its value from my point of view. Let's have a look on the inside of it. I mean, look at that! Look at that gorgeous high ceilings. Look, beautiful windows. Look how light and airy it is. And there's a front entrance, a staircase. I mean, look at that mahogany paneling there. That is just gorgeous. What a beautiful place. And there's another room there. This is a fabulous place. I'll show you the map where it is. Now, this yellow area here is the centre of Nottingham. It's there. This black one here, just about 9 o'clock, and that's it's virtually it's right on the edge of the centre. That's fantastic. Let's look at it there. See, it's good. Now, as we look at that down there, you'll see that there, I don't know if you can see it here, just under the price, but their asking price on a per square foot basis is £143.22 per square foot. That's what they're asking. And below that, you'll see that the size of the place is 4,364 feet. And of course, I checked those figures. I multiplied the price per square foot by that, and of course it came to £625,000. Okay, now there's no floor plan, unfortunately, so we kind of got to guess at the layout, but you get a pretty good idea of it. But I started asking around, and I find out that the previous rental income was £42,000, which I think is very, very cheap, too cheap. Now you've got to bear in mind that commercial premises are valued differently to residential. And there's a number of different ways, but the most common one involves applying a multiple, which is called a GRM, the gross rent multiplier, to the rental income, which is why properties that are empty are valued at less, and why you always take a property that's empty, because when you add people in and you suddenly get the rental income, the value increases, and that's when you get the mortgage. You get it in the first place on a lease option. Now, as I said, you apply a GRM, a gross rental multiplier, which means you multiply the multiplier, the GRM, by the rental income. But if there's no rental income, it's difficult. So it means really that an empty property is basically worth what people are prepared to pay. It's not a bricks and mortar valuation like it is in residential. So again, let's look at the figures here. So the asking price is £625,000. The previous rental income was £42,000. So let's work out the yield. The yield, you have to work out the yield. The yield is the rental income divided by the value, and that equals the yield times 100, and that gives you the yield, which is 6.72%, which is all right. You know, I wouldn't go at anything at 6.2, 6.7. 10% is quite, you can get 10% just lending your money out without it being tied up. So at this point, it doesn't look great, does it? A yield of 6.7%. But let's look a bit further on. Now, we need to find the GRM, the gross rent multiplier. We don't know what it is at the moment, but I did some more research and I found out that the average GRM for that area is 8.8. Now, the previous rental income, like I said, was £42,000 per annum. So when you multiply 42,000 by 8.8, you get a value of 369,600, which is a lot less than the asking price. It's not far off half the asking price. And you've got to start thinking, well, how can that be? How can they be charging almost double the price? And the reason for the increase is because it's a grade 2 listed building and it's a very desirable property. I also did some more checking with the council, and it's already offices. There's absolutely no problem with changing the offices around inside, provided you don't do anything stupid to the actual building itself. So the fact that it's a grade 2 listed building is not a bar to us doing a deal here. So when we want to work out the actual GRM, we divide that by the price being asked, or the value, by the rental income, and we get a GRM of 14.9. Now that's high. What you would consider normally a high GRM is 12%. A good GRM is 10%. A high one is 12%. 14.9 is very high, but that again is because it's a special building. It's a beautiful building. It's a listed building, but it's going to be worth it. Okay, so we now want to look at some comparables. You can see I'm thorough now when I'm doing stuff. We want to look at some comparables. And what I wanted initially was something that had the same kind of look as that. And I came at that, which is only about half a mile away from that property. It's called Hine House. It was built by a guy a couple of 100 years ago who lived in it for a long time. It's a beautiful building, but it's now all offices. Here's the inside of it. You can see again, it's all spacious and airy. To my mind, it's not as good looking as the other one, but you have your own views on that. But it's of a comparable. It's of a similar nature. Now we'll look at the information they're given with it. It's called Hine House at the top, Regent Street, Nottingham, and they're giving a rent here. This isn't for sale, by the way. They're renting rooms out. They're renting offices out, but their rent is £35 per square foot, which isn't high for offices, especially in a beautiful building like that. £35 a square foot is not high. I mean, people in London would kill you for £35 a square foot, you know, £150 a square foot down here and the rest of it. So when you look down at the bottom here, you'll see that there's two offices that they've got to rent, and they're both very, very small, 252 square feet and 355 square feet. I mean, these are like single bed bedrooms. I think they're tiny, but they're asking £35 per square foot. And that's very, very interesting to know. We need to keep those figures in mind. So I looked around again, and again on Rightmove Commercial, I came across this. Now, I was lucky that I managed to grab a couple of photographs of it, but when I went back to look for it later, I couldn't find the darn thing. And you think I could find it? I couldn't find it. Because luckily, I'm sure you will. It's in Nottingham somewhere. It's not very far away from these other two places. And I find it the same way as I find Hine House above there. But that's nothing special about that. It's just a building. Here's one of the offices. But look what they're charging rental-wise there, £47 a square foot. So we got a range here of £35 per square foot to £47 a square foot for rental income of that. So knowing that, I thought, let us do some new valuations for that property, which the property we're looking at, which is called Friar Lane. It's in Friar Lane, using a GRM of 14.9. Okay, now what you do is you multiply the rental income by the GRM, 14.9, and you'll get the value for the property. Now, I've gone down to £30 a square feet, and I thought we'll do 4 valuations, one at £30, one at £35 a square foot, one at 40, and one at 47, just to see how they come out. So when we did one at £30 a square foot, equates to a rental income of £120,000 a year, which is far more than the £42,000 they were charging, which makes me think, you know, that the people who've been in there for a long time, they haven't kept up with the owners, they haven't kept up with the way the market was moving, and they got left behind. They were charging, the rent was way too low, and they couldn't suddenly just put it up from 42 to 120, so they were kind of stuck. The place is empty now, by the way, but that gives you a value of 1.788 million. And that's quite a jump from 625,000, isn't it? Yeah. So I thought, well, let's go on and let's get a price for that 135 when you're charging £35. It's only £5 a square foot more, but it gives you a rental income of 140,000, which is another £20,000 a year. Not a lot, you might think, but look what it does to the value. Straight away, it puts the value up to £2,086,000. Big jump from 625,000. Let's look at £40 per square foot. Look at that. Now your rental income is £160,000 a year. What a jump for £42,000 a year to £2.384 million. £2,384,000. What a jump. And that's just charging £40 a square foot. Now, I think you'd get that. When you see that other house is charging £47 a square foot, it's only got 2 offices to go, and it's a nothing building, I think you get 45 or 47 pounds a square foot. But let's look at what 47 pounds a square foot multiplied by the multiplier. Let's see what that price is at. It prices at £2.8 million, and surprisingly, all those valuations give the same yield, 6.7%. So now, would you look at that final one there and say 6.7%? No, I don't want that. I think you're changing your minds now, aren't you? Don't be strung up about yields. You need to look into the figures. When you're in commercial property, you need to look into the figures. If you were charging just £30 a square foot, which is very, very low for that property, you're making a lot of money. If you were going to the higher end, and it's by no means stupidly high, 47, there's nothing really, especially for that kind of building, you're making a lot of money. Let's look at the figures again. Let's look at the figures here, the buying costs. So the purchase price is £625,000. Your deposit for that is going to be £187,500. Your stamp duty is only going to be £20,750, which is less than that residential property you looked at, and that's because it's only 3.3%, because you get a lot of help with commercial property you don't get with residential property. And I'm guessing the fees at £5,000. It could be anywhere between 3,500 and £5,000, but I put 5,000. I'm erring all the time here on caution. So I'm making the fees higher than they might be, and I'm putting profits lower than they might be. So I'm always erring on the side of caution. So your total buying cost of £213,000, 250. Okay. So let's look here. Your outgoings per annum. Right, you've got a mortgage at 2.9% for 10 years. It's going to cost you £4,200 per month, which is £50,400 per annum. So there you got your mortgage at £50,400 per annum. You've got no management fees because you don't need them. You've got no maintenance because the tenant does them. You've got no utilities because the tenant pays for them. You've got no extras because the tenant pays for them. And you've got no voids because you just don't get voids in commercial property. So your total outgoings remain at 50,400. Right, let's look at the 5-year figures here. You've got your income, and I'm looking at the 30 pounds per square foot level here. Your income is £120,000 by 5, which is 600,000. Your outgoings are your yearly cost, 50,400 by 5 equals £252,000. And because we did the rent over 10 years, we're going to 50% of the buying cost, which is 106,625, which is 358,625, which gives you a gross cash profit of £241,375,000. Not bad. So let's look at where we look at the equity increase. So there you got your cash profit there, 241. And your equity increase is 1.163 million. So your 5-year total profit is approximately 1.406 million pounds, £1,406,125. That's not bad, is it? That's pretty good. Let's look at 5-year figures at £47 per square foot. So we've got the income is 188,000 by 5, which is 940,000. And the outgoings are the same, which gives us a gross cash profit of 581,375. That's a 5-year cash profit. So we change that to our 5-year profit. We've got the equity increase of £1,400,600. So your total 5-year profit is 1.981 million, just under £2 million. How does that sound for 5 years for a commercial property? And that's because of the way the valuation of commercial property works. Okay, you get the message. So let me ask you a question. What has the internet, COVID, and the Ukraine war done to commercial property? Well, it's decimated. Everybody's dropping out of it, everybody's working from home, and everybody's worried about it. Always remember that change means opportunity. Opportunity means profit. And profit means tax. And this is where we get into it. Because it used to. So let's talk about tax. I know this is what a lot of people want to know about. Now, you're liable to UK tax if you or your company is UK based. If you or your company derives income from property or other assets, any assets that produce income, you are due tax on it. So let's change all that. Let's change it. What can you do? Well, first you buy a lakeside no, you don't. That comes later. You buy a lakeside mansion in Switzerland later. Along the joke. Come on, bear with me. But you need to relocate offshore. Not literally, I don't mean you go and live offshore. You mean to get your business offshore. You start a company in Gibraltar. You start an offshore company in Gibraltar, and you have bank accounts in the Cayman Islands or wherever you fancy, but not in the same country as where you're in Gibraltar, if that's where your business is located, or any other country you decide to start your business in. Keep your bank account and your company in different countries. There's a reason for that, I'll tell you later. Now, next, you move all your property and your other cash producing assets offshore into your new company using lease options. See? Lease options. I told you they were solid gold. use lease options. And I'll tell you how you do that. You just write, let's say you've got a property, it doesn't matter whether as long as it's not rent to rent, but if you've got a property that you own or you've already got on a lease option, then you can write a new lease option contract between you and your offshore company where you give your property to the offshore company. So now your offshore company, in effect, owns the income to that property, which means that you don't have to pay the tax on it, because legally, it's not your income, it's not your money, it belongs to the offshore company. Now, what's important to remember here is that you must not be a director of that company. The directors of a company are liable for anything the company does and are liable for the tax. So it's important that you are not a director. So what do? Well, you get local solicitors who will be nominee directors of your company. And I can show you how to do that. I've got the contacts, I can show you, I can get you the contacts, and they will be nominee directors of your company. Now, you don't have to worry about them jumping in and to your bank account. They can't anyway. It's in a different country and they don't know the details. And they can't do anything with your properties. Believe me when I say that they do billions of pounds worth of this every year. And to them, a few properties is small stuff. They're not going to risk their reputation and their business for a few lease option properties. Trust me, it's never going to happen. Never has and never will. So that's what you do. You are the shareholder, and legally the fact that you are the 100% shareholder is irrelevant in law. Shareholders are not relevant, are not liable for anything that the company does or any of its income or its taxes. You're quite safe. You have your new offshore company appoint you as a UK agent to manage their portfolio on their behalf for a nominal sum. So they might pay you 10 grand a year, and you might pay your tax on 10 grand a year or 5 grand a year, whatever you want. It can just be a nominal sum, but you are just acting. So you're in effect is running your portfolio exactly the same way you're doing now, but you're doing it on behalf of your offshore company. And when you get all the rental income into your account, you then pay it straight into your offshore bank account. You have to, because it's not your money. It's your company's money. So you have to do that. It's a legal thing, right? And then they pay you, whatever it is a month. And you pay the mortgage, you pay all the bills and everything on their behalf before you send the money over. And that's how that works. So you've got all this money now offshore, but you need to use it. So you have a company debit card that allows you cash withdrawals up to £2,000 or dollars, whatever currency you choose, every day. You can use the card for personal use, not only company expenses, because there are no tax returns to complete. And I'll tell you why. Because if you have a Gibraltar company, and I've had one for many years, if you have a Gibraltar company, you do pay Gibraltar tax. So I'm not saying you don't pay any tax. You do pay Gibraltar tax. But every company in Gibraltar pays the same amount of tax, and it is irrelevant what you earn. It doesn't matter whether you earn £10 or $1 billion. It's irrelevant. Everybody pays the same amount of tax, and that is £225 a year. Right. Now, because everybody pays the same amount, and it's not dependent on what money you bring in or what money you earn, there's absolutely no need to fill in a tax return, right? They don't want a tax return. In fact, there's nowhere to file it if you fill one in anyway. So you can do what you want with that money. You can spend it on anything you want, and you don't have to provide receipts and returns because nobody's interested in it. There you go. Now, your offshore company is legitimate also for securing your UK mortgages. So you can buy properties using your offshore company with the money you've got anyway. That's good. Companies like that, there's not a problem with it. The banks as well, I should say. You are not personally responsible for any of the company's actions because you're not a director. Like I say, the fact that you're the sole owner of the company is totally irrelevant legally. It's only the directors that are responsible, and the directors are local solicitors in Gibraltar. And but you've also got to understand that HMRC does not go investigating foreign companies. especially little piddly ones like this, they can't legally. They don't have the resources and the manpower anyway, and they're not interested in doing it. So, but there's nothing for them to find when they do, because it's legal. So there's nothing. This is completely legal. This is all your MPs and everything do. It's not. There's nothing wrong with it. It's just a way around the law. As long as you're not director, and that's the key thing, and you're not personally liable for any of the company's financial obligations, including UK tax. So there you go. Isn't that interesting? You get yourself into commercial property. You make a lot of money out of that. It's self-managing, it's self-running, but also as well, you don't have to do it just as I personally like commercial residential. And if you saw our commercial residential webinar that we did, where we go again, we what we do is we get an office block in the right place. We go and speak to the local social services department of the local council. We offer them the building after it's been converted to disabled living accommodation. We invite them to draw up the drawings, pull up the plans. We will convert it at our cost to whatever they want. They take it off our hands, and they keep it virtually forever. And you get full rent, even if the place is empty or there's voids. It's irrelevant. You still get your full rent. The rent for disabled accommodation it can be anything up to 50% more than for just residential tenants. And of course, it just goes on, and it's hands-off management. And that's one I personally like as well, because you get a lot of but there again, that's because that's now residential. The value of the equity of the property itself just goes up with the bricks and mortar price, which is kind of doubling price every 10 years, not the massive increases you can get with commercial when you're applying GRMs. So there we go. So this is the perfect time now to start auto-accelerating your property investing career. We're right at the start of a recession. Now we don't know when it's going to happen. It might be this year, it might be next year, but it's 12 years, 14 years since we had the last recession started. On average, they occur every 10 or 12 years, and it's irrelevant what the economy is doing. You can't say, oh, the economy is booming. We can't possibly get a recession when the economy is this good, because the last one, the economy was great, and it just bombed overnight. And look what happened. So the recessions will come. They're cyclical. They have to go. Everything can't go on climbing like it does forever. It's just unsustainable. At some point, it has to correct itself. So there has to be a fall, and that's what happens. There will be one. There's no question. At some point, there will be one, and you need to be ready for it. It's not going to wait until it hits and then saying, "Oh well, now where was that webinar? What do I do?" It's too late. You need to get in there and get prepared, because there's a lot of money. There's more millionaires made in a recession than ever in the boom times, and everybody knows that. Everybody knows that in business. So you can do it on your own, or you can do it with our help and our experience and our guidance. It doesn't matter, but do it. You need to do it. And I'm going to tell you something. Your life will only change when you become more committed to your future than you are to your comfort zone. Think about it. Your life will only change when you become more committed to your future than you are to your comfort zone. And I'm going to tell you that we're hosting a one-day commercial property, an off-day tax day on Saturday, the 27th of August. Now there, of course, we'll have the time to go through everything. We'll show you everything how to do. We'll show you exactly how to set up your offshore company and get your bank accounts done. You won't do them yourself. You won't get the bank accounts yourself, and probably not the company yourself either. You will need help to do that. But we'll go through, we'll show you how to do all that. Save you an absolute fortune if you've got property at the moment. If you've got a portfolio, save you a fortune. But if you're getting into it, and you should be getting into it, then it'll save you wasting it from the word go. So commercial property and offshore tax day. It's on Saturday, the 27th of August. You'll learn everything you discovered today, but in depth. And we'll teach you everything you need to know in order to succeed in commercial property and how to set up offshore. And I think I agree that it's going to be an incredible day's course. And you know that we always give value for money. So if you ever get stuck afterwards, we're always available to help. And I know for a fact that no one else ever offers that. So just think how great you'd feel waking up the next day and knowing, without any doubt, that you have a proven money-making property investing strategy that you know inside out. Can't fail that, and have professional backup completely free if you need it. Okay, look, I don't care if you're the most skeptical person in the room, but even if you are, even you must realise that this is an opportunity that you rarely come across. But whilst you're pondering and procrastinating, I want you to think about this. Whether you come on this course or not, it won't change my life a little bit. Won't make any difference to my life, but it could change yours. Well, I think you'll begin to realise now what I'm like, how I grab opportunities, how I think outside the box, and how I'm not afraid of taking chances, and how you being associated with me and John and our team could only be beneficial in a big way for you. Now, you've heard the expression, if you're the smartest person in the room, get out of the room. And birds of a feather flock together. If you want to be successful, then you should hang out with people who have a success mindset and learn from them. Okay, now I know you're gagging to know how much this course is going to cost you, right? It's the same as all our courses, and it's £475, and that's it. There's no extras, there's no upsells for another course to learn the rest of the stuff. Just £475 gets you everything you need to know. Now, it may be that you're considering joining our personal mentoring program. But if you're wondering if it's value for money, and you're wondering if this strategy is covered in the training, yes, it is. So here's an opportunity for you. Come on our course. That will give you a chance to see how we work, how we get on. And if you then feel confident, you can join our mentoring program and also have the chance to join John and I in business. How about that? More about that during the course. It doesn't get much better than that, does it? Except it does. Because if you join our mentoring, the money you paid for the course, your course fee, you will get back. So any courses you've done prior to joining our mentoring, you'll get those fees back. How about that? Personal mentoring. And when we say personal mentoring, we mean you have personal access to me, unlimited personal access to me. I don't care if you've got a problem at 8 o'clock on Sunday night, you call me and I'll take your call and I'll help you with the problem. Because that's the way I am, and that's the way I think things should be in business. I hate when you go on a course, you got a question on a Monday, you can't get hold of anybody out thereafter. I think it's wrong. I don't work like that. So your mentoring was good enough for Mark Zuckerberg, Bill Gates and Richard Branson. It's good enough for you. They all had mentors. Their mentors got them to where they are. And it can guarantee success, and it can help you. And the thing is that once you start becoming successful, the more success you get, because you've heard that saying, success breeds success, and it does. Because the more successful you become, then the more you get the mindset, well, I can do that. That wasn't difficult. If I can do that, I can do it again. And so you go on, and so you do it. But you have to start somewhere. You have to make a start. It's no use sitting around forever thinking, yeah, all right, but I'll start when I get the money. Because if that's your mindset, well, good luck with that, because you're not going to get the money. The money will come to you if you need the money, but you don't need the money until you make a commitment in your mind, until you make a mental commitment to do it. Then the money will finds its ways of coming to you. And that's a strange thing in the world, but that's how it does. That's how it works. So we'll give you the skills and the confidence to help you succeed in property investment. And we do 3 periods of personal mentoring. We do a 3-month, a 6-month, and 12-month. You can talk to us about that. And remember, it's in our interest that you're as successful as possible. So we want you to be successful, and we'll do everything we can to do it. Okay, right. I hope John's there, because now we're going to have our Q&A session. You there, John?
Yes, I'm here, Peter. Thank you very much, Peter, for that. And thank you for everyone who stopped with us. I hope you've all been able to take something from it. And of course, there's a lot more to this subject to be covered. So if you do want to learn more, that's what the training course is. It's going to further depth and to get you to the next level, really. So fantastic. So if we just go into the chat box. Yes, Peter. So first question about capital allowances. Is that is that something that you're going to expand more on at the training course, Peter, with regards to this subject?
Yeah.
I know we've been limited for time this evening.
Yeah, I mean, obviously, you can only touch on stuff tonight. We haven't had a chance to really. I mean, we've done a lot, an hour smack on, and without stopping, we can't cover everything in an hour. You just can't. But yeah, we cover it on the course. Absolutely.
Yeah.
Capital gains.
Okay, fantastic.
Gains tax and everything like that. But of course, you won't pay those if you're offshore.
Okay, yeah, just still looking in the chat. I got a positive comment there from Sardi, so I appreciate that, Sardi. Thank you. And just to reiterate, the recording will be going out in a few days' time onto the website, and
It should be,
you probably get.
should be finished by Wednesday. So Wednesday evening or Thursday, the recording of this will be on our website, so we'll have to view it again.
Yeah. Okay. Fantastic. Yes, just another question just coming, Peter. So, with regards to the topic tonight, so why just commercial rather than C2R? I believe that's just time again, isn't it? But
I just touched on that at the end, actually. The reason we stay with commercial is because you get a massive increase. When commercial property is valued mostly on the rental income. And when there's no or very low rental income, that means that the value of the property is valued very, very low. Peanuts, absolute peanuts. Now, once you fill it with workers, offices, or you rent it out, or whatever you do, once it's fully rented out and your rental income is high, then you multiply that high rental income by your GRM, and you get a massive new valuation. I'll tell you a true story. The Dragon's Den. What's that Scottish guy whose name I can never remember? Who I used to know.
Duncan Valentine.
But
Was it Duncan Valentine? Was it?
Yeah. He used to live in Jersey. I know the bloke. I knew the bloke in passing. I wasn't a friend or anything, but I knew him in passing. And I'll tell you straight, this was in the 70s. He was a beach bum. He used to sit on the beach, and he won't mind me saying this. He's a straight guy. But he used to sit on the beach at St. Wan's in Jersey by the bar there, and he used to pretend to be a surfer and he used to drink all day. And then he met a young lady in Jersey, and they moved to Brighton. In Brighton, he did a government course on being a mechanic, and he did a diesel mechanic. And then he started visiting local farms in the area, fixing their tractors, made a bit of money, moved up to Sunderland with his girlfriend, and started doing the same there. But he bought cars there, and he bought them from auctions. And while he was in an auction, he saw an ice cream van. So he bought the ice cream van and started selling ice cream. As you know, that's a cash business. And all this cash to do with, so he bought a house, an ex-council house, and he let it out. And he started getting into property like that. This is in the early 80s. Started getting into property, still doing that. And being a smart guy, he also bought more ice cream vans and started making more and more money. And then it was about this time in the early 80s, 82 or 83, when Margaret Thatcher changed all kinds of laws, including one with care homes. And he thought care homes was a great idea. So he decided to build one from scratch. He got some land. He got as many credit cards as he could. He borrowed all the money he could. He got in touch with builders he knew, and he did a deal with them that they would help him, and he would pay them as much as he could and pay off the balance at the end. And he built a care home. Now, obviously, when it was empty, it was worth zilch. So what he did, he needed to get it valued. He got everybody to bring their friends and mothers and everybody in and fill the house so the care home. So it looked like the care home was full, and there was a massive amount of money coming in, and they got a very, very high valuation on it. And he sold the care home, and it's a story going around that it's a true story as well. He says it himself in his book. He was due to go up to the Lake District for a week's holiday on a Monday with his family. And on the morning, he had a letter in the post with a check in the envelope for £20 million. And that's how he got into business, and that's how he started making his money. So he did that using this same principle of GRM. So that's why this isn't about commercial to residential. That was a previous webinar that we did. If you do it to residential, then you're back into residential property, and your money. The equity in your property just comes from standard bricks and mortar increases year after year. But with commercial property, you can make far more, as we've just shown you in these examples here. So that's why.
Okay, hopefully that's okay then, Paul. Okay, fantastic. Yeah, if anyone has any more questions, obviously now's the time, so please do put them in the chat box. Yes, just to reiterate, Kate, this has been recorded. So in a few days' time, once it's edited, this will go out, and our previous webinars as well are all on the Pika website. And perhaps you could bring up the link to the website on the screen, Peter. Is it on the final slide?
It's not a live link. You'll need to copy it down, write that down, and post it into your browser, and you'll get the registration for our course. All sorts of stuff. because we'll have all day to do it, and we'll be able to get into it. The course, as I say, the course for your webinar. It's a Zoom course, yeah, Zoom. So you don't have to travel anywhere. You can watch it from home. It also means you don't have to worry about traffic and anything and going out for lunch. So it's cheap from your point of view, but it means we can still show everything. It's a great way. It's a way of doing it. There's a question also from Shadi there. Controlling the commercial office building by using lease options. What Peter told us this evening, if we wanted to offer this to the council guaranteed let, would that be a totally different strategy, but still using lease option formula to acquire? Yeah, we talked about that we talked about this strategy when we did commercial residential. And yeah, you've got to remember that in commercial property, lease options are used for about 90% of the deals. Commercial estate agents are a completely different breed of people to residential estate agents. They know what lease options are, they like them, they understand them, and they'll be surprised if you didn't use them. So yeah, absolutely, you're going to use lease option on this because you can save a fortune by doing it, and we'll show you how to do it. For example, you can get a 5-year lease option on this building, so you're only paying a lease option fee for 5 years, but you've got a massive rental income. And when you come to get a mortgage for it at the end of 5 years, it's peanuts. You're making a lot of money. That's how it works.
Great stuff. Esper, thanks for the message. If you could get in touch with Peter, or if Peter could get in touch with you just after the webinar, and then you'll be able to confirm the details with regards to the mentoring, if that's okay. And we will make a note of that so we don't forget. Thank you.
Okay. Well,
yeah. I don't think I've missed anything. Hopefully, I've not missed any comments there in the chat box.
If we've missed a question, come on. Oh, here's one. Esther put, how much is your mentoring? Good question.
I've just mentioned that, Peter.
Oh, did you?
Yes.
Excuse me, not on mine. We do a 3 month, a 6 month, and a 12 month. The 3 month is £5,000. Now there's no VAT to pay on this, so it's just the £5,000 VAT for 3 months. The 6 month is £6,000. So you get double the time for only £1,000 extra. And the 12 month is £7,000. So you get 4 times the amount of time for just £2,000. And we're trying to keep it reasonable like that. We want people to do the longer one because it's usually better for them. We want people to rush it, but we don't want to charge people a fortune. We're not going to be charging 25,000 quid like some people who'll be nameless are charging. So, but it's got to be enough that the people see a value in it. If we did this for free, people just wouldn't believe it, wouldn't do it. So, well, yeah, there we go. So it's 3 months, 6 months, 9 months, and it's 5,000, 6,000, 7,000. There you go. We're not hiding anything. Any more questions come in? No, that's it. All right. Well, look, who sets up the offshore company plus a bank account? We're going to have to cover that now. That's a bit complicated. We're going to have to cover that in the course. You're probably not going. You're not going to do it yourself. Probably it's quite complicated, especially the bank account, offshore bank accounts. You can probably imagine, and getting the solicitors to be your. But we have agents. We have people who do it, who will do it for you, set the whole thing up for you, and very quickly in about 4 weeks to get the whole thing done for you, up and going. And they're the people who set me up in it. They're fantastic. So we'll go into that in detail, of course, on the course. Okay. There you go. All right. Thanks, everybody. I've been struggling a bit to get through. Like I said, I took a head dive into a wall on Saturday and I had a bit of concussion with it. I wasn't drunk. I was chasing the dog and playing with the dog. I tripped over the rug and went into the wall, and I knocked myself out. I thought I cracked my skull. I compressed my vertebrae, my neck. I've done my shoulder in. The shoulder that in 4 weeks I'm having an operation on. I'm having a complete new shoulder rebuilding that. I went smack that into the wall as well. So I've not been very good for a few days. So if I've been a bit too woozy tonight, that's what it is. But I didn't want to not do this because I just love doing these, and John and I love doing them, and we love people to more than anything, we want people to take action and make money out of this. This is what it's all about. This is so simple. This is so easy, and we'll help you do it. And like we said before, don't worry if you don't have any money. You don't need money. That's what lease options are for. You don't need money to make money out of property. You start with nothing. We'll show you how to do that on the course. So So thank you very much, and we hope to see you on our course. We'd love to see you there. We'll get you going, and you'll know what it's all about. Thank you very much, everybody. Thanks to you as well, John.
Cheers, thank you. Always a pleasure. So take care, guys, and have a great evening, and hopefully see you soon.
Thanks, everybody.
Cheers. Bye. Bye. Bye.